I'm Lori Patch with Keller Realty, and our Lunch and Learn for January 2023 is about reverse mortgages. And our guest speaker is Matt Allen with Longbridge Financial, and he's considered an expert on reverse mortgages. So take it away, Matt.
I teach continuing education classes for realtors, financial planners, attorneys, insurance agents. I've also written articles for both local and national publications about reverse mortgages as well. So truly an expert in this product and its uses. So my plan today is kind of give you a basic overview of the reverse mortgage, how it works, and then kind of cover some of the misconceptions that surround it. And then at the end, if you guys want to ask questions, or even if while I'm talking, if you need clarification on anything, let me know and I'll stop and we'll dig into it a little bit further. So when I say reverse mortgage, typically what I'm talking about is the FHA home equity conversion mortgage. There are other reverse mortgage products out there. We call them proprietary products. Were specifically designed for multi-million dollar homes, so a jumbo reverse mortgage, but it also fills some of the gaps within the FHA loan, but probably 98% of all reverse mortgages are the FHA loan. Biggest question I get is how much can you borrow? And that's a tricky question because there's a lot of variables to that. One is how old you are. The older you are, the more you can borrow. Two, obviously depends on the home value. And then three, depends on the current expected rate. So those three things combined will give us what percentage of the home's value you can borrow. With rates where they're at today, depending if you're on the low or the young age at 62, you're about 30 to 35% of the home's value what you can borrow. If you're on the upper end, 80 plus, you're probably around 48 to 52% of the home's value is what you can borrow. So, and then everything in between, depending on what your age is. How do you get access to the equity? So, you can get a line of credit, you can get a lump sum of cash, you can convert it into monthly payments for a specific term, or for as long as you live in the house, you would receive monthly payments. Or you can do a combination of those things. The one thing I do want to make really clear is the reverse mortgage is a mortgage. It's just a mortgage. There's lots of bells and whistles that go with it, but it's still just a mortgage. So because it's a mortgage, your requirements are you have to pay your property taxes, your homeowner's insurance. You have to live in the home as your primary residence, and you have to take care of the property. So if window's broken, the roof needs to be replaced, you need to take care of those things. Nobody verifies that you're taking care of the property, but you are, in the contract, you're saying that I agree to do those things, which, you know, it's better to take care of those things because, you know, if you got a hole in your roof, it's just going to lead to a lot of other problems, right? You don't pay any income taxes on any of the proceeds that you get. So if you pull money out of the line of credit, or if you take a lump sum, or if you receive the monthly payments, you don't pay any income taxes because technically it's not income, it's loan proceeds, and therefore it's not taxable. So who gets a reverse mortgage? I will tell you that the bulk majority of my clients are doing it because they have to, or they're trying to get relief. Usually it's due to loss of a spouse, therefore we've lost household income, retirement assets are running out or have run out, they've been living off of credit cards to supplement their income. It's just a variety of financial problems and the client is looking for relief. On the flip side of that, I have a handful of clients, and that's really what I preach a lot, is to be more strategic with the reverse mortgage, and there is a lot of strategy that we can use with it. One of those is retiring or managing your retirement assets. So what you gotta look at is if you had a large expense, do you wanna pull it out of your retirement portfolio, which you're typically gonna get taxed on? Or does it make more sense to pull the money out of a reverse mortgage line of credit? There's other ways to do it as well, as if your portfolio is not performing well, instead of pulling money out of your portfolio, you pull it out of the line of credit. And then in a year, you reassess things. If your portfolio is positive again, then you start pulling money back out of that. My favorite thing is what I call the switch, which is if you currently have a traditional forward mortgage, is getting the reverse mortgage but continuing to make the payments that you were making on the reverse mortgage. And I know that sounds weird, but the reason why that makes sense is that if we structure it with a line of credit option, dollar for dollar, whatever you pay towards your loan balance not only pays your loan balance down, but it increases your line of credit. And what's really amazing is the line of credit actually grows. It's not stagnant like a traditional line of credit. It grows at whatever the current interest rate is plus 0.5%. So what I always tell clients is that if you've got extra money laying around, or you do the reverse mortgage, maybe if you can't make the full payment because it's too much of a financial burden, maybe you make a partial payment, but you're basically just saving that money for future use at some point in the future, obviously if that's future use, but it's also growing, so you're gonna get a lot better growth than you would in a savings account, right?
I don't understand something.
Sure.
So I thought you said that if you had a regular mortgage.
Yep.
And you got a reverse mortgage.
Yep.
But the payments you're saying you make on the reverse mortgage?
You can. So that's the beauty of the reverse mortgage, is it gives you a lot of financial flexibility. So you can make payments, you don't have to make payments, you can pay as much or as little as you want, whenever you want, because there's no payment required.
So you're paying on the regular mortgage and the reverse
No,
mortgage?
the reverse mortgage would pay off your current
Okay,
regular mortgage.
all right,
Yeah.
now I think I
Yeah,
got it.
okay.
Okay, and then you keep making the payments, but it's good.
Yeah, and you don't have to. If you have the extra cash, it makes sense to make the payments.
Yeah, okay.
Unless you've got somewhere else you wanna put that money or invest that money. But if you have extra cash laying around or extra cash flow in the month, it does make sense to make the payment. The bulk majority of people do not. But I always wanna bring it up, because it is a really good way to use the reverse mortgage to save that money versus keeping it in cash or putting it into a savings account where it's not getting as much growth, so.
What is that payment compared to your regular house payment that you had before?
It's whatever you want.
Oh,
There's no set payment. So you can literally pay, if let's say your payment was $1,000 and you found that to be burdensome, but you felt comfortable with a $500 payment, you can make a $500 payment if you want to. If you're going along, you make payments for 6 months, then all of a sudden you have an expensive month, healthcare, the car breaks down, whatever, you don't even have to make a payment that month. So it just gives you a lot of flexibility that a traditional mortgage does not.
But they're charging interest at the
They
same
are.
time,
Mm-hmm.
so that you're paying.
Just like a mortgage, yeah, just like a regular mortgage, yep, there is interest.
Can you use this like a regular mortgage with basically a line of credit on
Yep.
your house? Is that what you do? And then you just pay it off like a regular mortgage? But if you wanted to take a big trip or something like that, you say, okay, I'm gonna take $20,000
Yeah.
out, and then,
Yep.
but, okay.
Yeah, and that's the nice thing about it, is you take that money out, you still don't have a payment. I mean, you can make the payment if
Right.
you want to. Again, it's basically what it's doing, if you own your home free and clear, is we're liquefying an illiquid asset, right? I
Right.
mean, real estate is a great investment, but it's not liquid.
Mm-hmm.
The only way you get access to it is either you gotta sell your house, but then you still need a place to live, or you borrow against it. And traditional borrowing, whether that's a forward mortgage or a HELOC or something like that, comes with a monthly payment, which can be burdensome to a lot of our older retired homeowners. This doesn't require the payment, so it's a way to access that wealth without impacting a budget and, allowing them to have more cash on a monthly basis, so. So when should you get a reverse mortgage? It's kind of a loaded question. My answer is that you should get in general, so I'm speaking very generally here, okay, because there's always exceptions to this. But I think that when you hit retirement, that you should seriously consider getting a reverse mortgage at that point. The reason being is that the way most people use a reverse mortgage is as a last resort, right? They've expired or spent all of their retirement assets, and there's no other option than the reverse mortgage. But again, if you can get it set up early on to retirement, you don't, and I get it, a lot of people don't need a reverse mortgage, but if you own your home free and clear, and you set up a $200,000 line of credit that's growing today at 6 or 7%, 20 years down the road, that could be a big chunk of cash that's available tax-free for you to deal with in-home care, long-term care, medical issues, things like that. All of a sudden you've got a big chunk of cash to deal with that. So I look at it for people that don't need it as more of an insurance policy to deal with things that are in the future. Because the reality is that most people say they're going to retire later in life. The bulk majority of people retire at 62, and there's about a 25% chance of living until you're 92. So that's 30 years of retirement that a whole lot of stuff can go wrong, financially, medically, physically. So it's having this as an insurance plan for all the stuff that's going to go or potentially go wrong during retirement. The other things is, like we just talked about, a standby line of credit. Gifting, I see a lot of this as well. So people typically, what I see this is in their late 80s to early 90s, they want to start gifting money to their family. And so instead of pulling that money out of retirement, which is typically going to get taxed, they're looking at doing the reverse mortgage, pulling the cash out of that. So at least if something does go wrong, they still have all their cash available to them, and they're not going to have the tax repercussions of pulling the money out of retirement. And then there's downsizing, upsizing. Upsizing, again, do you want to take on a mortgage payment and or pull money out of a retirement portfolio to buy a bigger house? Or would we look at the reverse mortgage as an option to purchase that bigger house? Or downsizing, do you want to pay cash for the house? Again, the problem with that is you're tying up all that cash into the house, which is illiquid, versus being able to retain anywhere from 30 to 50% of that cash, either in a savings account and or put it in retirement, or do put all the money down and set up a big line of credit. Again, what we're trying to do is create liquidity during retirement and having access to cash. So the big question I always get is, what happens when you die? So when the last borrower has passed away, that starts the clock. The day of death is the clock starting to tick. So whoever is going to inherit the house, typically the heirs, they need to contact the servicing department, preferably within 30 days, but I believe they have up to 90 days to contact them. And once that contact has been made, then it extends it out. So you have basically 6 months from the date of death to get the loan satisfied. Typically what's going to happen is the heirs do not want the house, so they're just going to sell it, and they would get the difference between what's owed and what they sold the house for. So for example, if they owed $300,000, the home's worth $500,000, they sell it, they're going to net $200,000 less title escrow and realtor fees, right? So, which brings me to the next thing, which is the myths that surround the reverse mortgage. The first one is that the bank owns your home. That is not true. This is just like a mortgage, any other mortgage. There is a lien against the property, but you are still the homeowner. So you can sell it, you can refinance it. If you won big up at Seven Feathers and you've got a bunch of cash now, you could pay the mortgage off if you wanted to. It's your house, you can do additions, you can repaint it, remodel it, it's your house, okay? And that's why, again, the heirs can inherit the property when you pass.
What do you mean by refinancing?
So you're refinancing, so you're getting a new mortgage to pay off the old mortgage.
Just like a regular mortgage?
Yep, yep. Yeah, this is just like any other mortgage from that standpoint. It's just there's a lot of bells and whistles and features to it.
So they do that if you've made improvements, it would make sense.
So you're talking about refinancing a reverse mortgage into another reverse mortgage. You can do that. Typically, was it 2020, 2021, there was a lot of refinance activity with the reverse mortgages. I talked the bulk majority of my clients out of doing it because most of the time it did not make sense. But I did do a handful of them. Because you really gotta make sure that it makes sense, and there are certain requirements that need to be met for it to be approved. One of those is, are you getting 5 times the cost of the loan? Are you getting 5 times that access to equity? And a lot of times you're not. So it just typically doesn't make sense to refi into another reverse.
I don't know what that means.
That's
You're
okay.
getting 5 times
So the cost of the reverse mortgage. So if the cost of the reverse mortgage is $20,000 and you already had a reverse mortgage, you would have to get access to $100,000 of equity for them to even approve it.
Okay, no.
Unless there's
It's starting.
some extenuating circumstance that you really, really need the cash, but usually it's not approved. So, because what they don't want happen, they don't want the borrowers to be what they call churned, right? Where you're just constantly refinancing them to get you a couple $1,000s. They don't want that happening. If the bank gets your home when you die, again, that is not true. It's your house, so you can leave it to your heirs. The bank can take your home at any time. That is also not true. You've got to pay your taxes and your insurance. If you don't pay your taxes, the bank can foreclose. But if you don't pay your taxes, the county is going to foreclose. Someone's going to foreclose if you don't pay your taxes.
Question?
Yeah.
What if you don't have heirs?
So that's a really good question. So what I always talk to my clients about that is do you have a nonprofit that you could leave your house to? Do you want to leave it to your church? You could leave it to the city, maybe there's enough there for them to do a park or something, I don't know. But think about who else you would want to leave that to versus just the state at that point would take over the estate. So the state would take over the estate.
Right, got it.
So you can outlive a reverse mortgage. Again, that's going to be impossible unless there are modern medical miracles because the loan goes until you're 150 years old. So you cannot outlive the reverse mortgage. You could outlive the proceeds, so if you took a lump sum of cash and then you bought a bunch of lottery tickets, then yeah, it's gone. But you get to continue to live in the house, you just don't have the cash anymore. But the loan itself is active until you're 150. Your heirs get stuck with a big bill. Again, the heirs are not responsible for paying off the debt unless they want to keep the house, or if they're going to sell the house, then it gets paid off through escrow. Social Security and Medicare will be affected. Social Security and Medicare will not be affected, but if you're receiving Medicaid, it could be affected. There are just some planning things that you've got to do with that. My kids would not want me to do this. What I have found is the kids are usually very supportive of it because they don't want to take care of you. So they would rather you be able to take care of yourself. And I actually get a lot of kids that call me on behalf of their parents to help them get the reverse mortgage because either they need some care or they're just struggling financially. And really at this point, for most kids, they're going to be in their 40s to 50s, maybe 60s. That's kind of their prime earning years, and if they're supporting family, they're not able to save for themselves. So, and so the last one, and then I'll open it up to questions, is, and I talked about this a little bit, but reverse mortgage should only be used as a last resort. There have been a lot of studies and research by people way smarter than me with PhDs and everything else, and they've run the scenarios, and actually the worst way to use a reverse mortgage is as a last resort. It is much more financially sound to get it early on into retirement, and use it as part of an overall financial plan. But it's still I've run out of everything else, now I'll have to tap the equity. But that is quite possibly, it really truly is the worst way to do it, that's the way most people do it, so. And you can use the house or use the reverse mortgage to purchase a home too, so. Questions?
So how would you do that if you wanted to use a reverse mortgage to purchase?
Yep, so it's just like any other mortgage, you're gonna put a down payment, and then the reverse mortgage, the mortgage balance makes up the difference. So right now with where rates are today, like I said, you're gonna need between 50 to 65, maybe 70% down, depending on your age. But it's just like a regular mortgage. The entire process is the same. You guys make an offer, get your pre-approval letter, or get your pre-approval letter, make an offer, title and escrow gets opened up, appraisal ordered. I mean, the process is the exact same as with any
It just
mortgage.
means that you don't have to make the payment.
Correct, unless you want to, right? This gives you that flexibility.
Yeah.
And so again, if you're downsizing, it gives you the ability to retain a bunch of that cash. If you're upsizing, instead of taking on a mortgage and or using money out of your retirement portfolio, the reverse mortgage can help prevent both of those things, so you don't have a mortgage payment and or pulling money out of your retirement, so.
I have a question on behalf of my friend.
Mhm.
She was wondering what happens if you are hospitalized for a chunk of time.
Good question. So technically, the home has to be your primary residence. The way that they look at it is to be primary residence 6 months and 1 day, okay? The reality is that if you were hospitalized and or had to go to assisted living or dementia care or something like that, if you're out of the house for a year because of that, the loan does technically become due. And but the reality is that if you've been in that situation for a year, the likelihood of you coming back is very slim.
So you have 364 days.
Well,
Basically.
yeah, so it's more of at that point, if you've been in a facility for that long, typically the family's going to get involved and figure out like, what are we doing, mom or dads, or what are we doing here, because then the question is, how is it being paid for? Medicaid does kick in, but then Medicaid will typically have a lien against the estate if it's used. I mean, there's just a whole lot of things to consider in that situation beyond just the
If
reverse
someone
mortgage.
else is living in the home but the primary homeowner is hospitalized, is that still considered primary residence?
No.
Okay.
Well, it's still a primary residence, it's just that 1 year period.
Right.
Now, how are they gonna verify that they haven't been in the house for a year? That's the question, okay? So what does happen once a year, you do get a attestation where you're testing that I'm still living in the house as my primary residence. So you get that, you sign it, send it back to the lender. You can also do it online. But that's the only way they know that you're still living in the house.
Okay.
Unless you've passed, and then there are different ways that they get notified that you have passed.
Gotcha.
So.
Thank you.
So, go back to your question real quick. Is the person living in the house, are they on the loan?
No.
Okay, then no.
It's a partner, but the partner is not on the loan.
Okay. Yeah, so gotta be really careful with that. So if they're not on the loan and they're not on title, and let's say in that situation, she passed away, the loan's gonna come due, so then what's gonna happen to the partner?
Right.
So if we're trying to protect the partner, then we really gotta look at, how do we do that? And there are ways to do it. So again, it's a little bit more complicated than that answer, depending on what they're trying to accomplish. Is it a transfer on death deed? Does that protect the spouse? But the issue is he's still got the loan that has to be paid off if she's passed. So sometimes it's better to have them on the loan.
Just have them on it together. And if they're on title but not on the loan, that would still be the same.
He could
But
be.
he could be the heir, right?
Well,
Not on title.
uh, the partner could be put on title after the loan is closed, but that still doesn't give them any protection from the loan standpoint of it coming due when she's passed.
Yeah.
So, again, there's just a lot of things you'd have to really look at that to make sure that everybody's clear on what happens, and are there ways to structure it to protect
Right.
the person.
So do you do, like in the case where somebody is unable to leave their house, can you do a in-home kind of consultation?
Oh, yeah. Yeah,
Since
I-
it's so specific to a
Mhm.
person, you know, their age and what they're trying to
Yeah.
accomplish with the reverse mortgage.
Yeah, you know, I'm probably 50-50, like, 50% of the clients I'll go and meet with them in their house. 50% of them want to come to my office to verify that I actually have an office and I'm a real person. So it's, yeah, so I actually do a lot of home visits, and which is actually really good anyways, because I can do a quick inspection of the house, make sure that there's not gonna be any issues from an FHA loan standpoint, like, you know, do we have dry rot, do we have paint issues, is the roof bad? I mean, so I can look at all that stuff real quick and just say, okay, these are going to be problems, and get those addressed prior to. Ladies, questions?
I'm overwhelmed.
Okay. Yeah, it's really, it's a simple but yet complex product, right? It's simple from the standpoint of, it's just a mortgage, and payments are optional, you just gotta pay your taxes and insurance, right? It's that simple. It gets more complex the deeper you know, you pull back more layers of the onion, the, you know, that's where it can start getting really complex. But a lot of that stuff is irrelevant, but it's also important. It just depends on how deep somebody wants to go. So I've actually had a client that actually downloaded and read all of the underwriting guidelines for this product.
Wow.
So, yeah, some people don't care, they're just like, look, do I have to make a mortgage payment anymore? No, great, let's do this. You know, other people really wanna dive deep into the details, which I'm happy to do, but like you just said, it can get overwhelming from that standpoint, the deeper you go,
So a
so.
lot of people have equity in their house, but they're cash poor and they can't do anything.
Correct.
So the beauty of it is, if you utilize it before you're desperate, that you don't have to be desperate, that you can adjust how much your payment is
Right.
or not make a payment and be
Right.
using that equity in a very flexible way.
Correct. You know, the statistically, I mean, the statistics for retirees is depressing, to say the least. So, people between 55 and 64, the median, so half is greater, half is less, the median retirement portfolio is $120,000, which is not a lot, especially for 30 years worth of retirement. I think it's 15 or 20% of all retirees rely on just Social Security, which is again hard. So we got to look at, like, you've got this massive asset, right? That's, you know, especially here in the valley, is 300 to 500,000, you know, 300,000 plus. It's this huge asset, it's this huge bucket of cash and wealth. How do we utilize that without impacting budgets, without impacting or creating payments? You know, how do we access that? And that's why the government created this product, is it's a way to access that wealth. There are 7 other countries that have products very similar to this. So Canada, England, Australia, India, Korea, I think. I can't remember them all, but they're all very, very similar to this product. And again, because it's a great way to access that wealth without impacting cash flow. That's the big thing about it. So.
So I know that you just said that you're officially at this new company.
Yes.
And I don't know if do you wanna write on a piece of paper your contact information? I can make copies for people to take, or?
So so this is my previous company, has my previous email, but my phone number is still the same. So that has all my contact information here.
So it's in there.
Yeah,
Okay.
yeah. But yeah, it's a great product, it's just highly misunderstood. And then it's all about structuring it the best way that impacts you today and also in the future, so you have it structured the best way from that standpoint.
I have another question.
Okay,
If you sell your house,
yeah.
are there are there fees when you sell it that you have to pay on top of the amount that you owe?
No. No, there's no balloon payments, there's no prepayment penalties, there's no additional fees, there's no equity sharing. It's just if you, let's say 5 years down the road, you owed $250, the house is worth $500, you're gonna get the $250 out of it, less title escrow
What
and
about,
other fees.
like, they have something like deferred interest, what's that?
Yep, so if you don't make a payment on the reverse mortgage, what's happening is you are deferring that interest. And so your loan balance is increasing over time. So with the easiest way to look at it is, do you wanna make a mortgage payment? Or do you wanna keep the money in your pocket?
But if the amount increases over time, but is
Yep.
the deferred interest separate from that amount, or is that another? I don't understand.
You're deferring any payment, so you're deferring the interest every month. So it is accumulating over time, does that make sense?
That's what makes the amount more, right?
Correct.
The deferred interest is what makes the
I
payout amount.
actually have one,
Oh, okay,
and so the statement that I get
yep,
has the amount that I owe, the
Yep.
amount that it's gone up, you
Yep.
know? And then it has this little thing at the bottom, something about deferred interest, and there's an amount there, and I don't know.
yeah, so typically on the statement is you'll have the first block, right, that shows your principal limits, growth of your principal limit, current loan balance, and then on the other side will show if you have a line of credit and growth and things like that, right? And then down below that, it usually breaks out the mortgage insurance and then the interest that's accumulated on that for that particular month. And then usually on the second page, how much is accumulated for the year.
So, if I were to sell the house, would I owe more than the amount that I currently owe, or is that deferred? Yeah, that's what
Yeah,
I
yes and no. Okay, so this is what. So if you got a statement today, right, or you got a statement on January 1st, and it says you owe $200,000, but you don't sell your house until the end of January, you're gonna have 30 days of interest that have accumulated during that period. So it's not 100% accurate, but it's close enough. Does that make sense?
I don't know what this little line is down there, that and I know it has a figure 7 in it, but I don't remember if it's a percentage or $7,000 or, you know, it's a little.
I don't know. I have to see it.
Yeah, okay.
Um,
So I just wondered.
You could email him a
Yeah,
copy.
you can
Yeah,
send
I
me.
don't know what I wanna do.
Yeah, you can.
I'm kinda stuck,
Okay.
very, very stuck.
So you can
No.
text me your statement, and I'm happy to look at it with you.
Okay,
So
yeah, I don't text.
okay.
But you could come by here, I could help you with
Yeah.
that. So he could just take a look at it and then he could tell you what
Yeah,
the
that'd be-
bottom part
Yeah.
is.
That'd be helpful.
Yep. Yep.
Also, on the percentage, like, I remember that, it used to be, I thought it was like a set 50%, and then if you were over 75, it was
Mhm.
55%. But
Mhm.
you're saying that fluctuates.
It does,
Yeah, and
depending
it's
on
not
where.
that high anymore. So-
It is not, because interest rates have gone up. And so as rates go up, it reduces the amount that you can borrow.
Oh,
So it does fluctuate.
I see.
But yeah, for, gosh, a long period of time, it was pretty standard to say at a minimum you could borrow 50% of the home's value, and then the older you were, the more you could borrow. But because of what's happened over last year with rates going up, it has reduced it significantly.
What is the interest rate right now?
It depends on the product, but you're probably, I would say, realistically in the 7s right now for an interest rate.
It's gone up quickly.
It has. Yeah, because a year ago, you would have been in the 3s. Well, for the reverse mortgage,
Oh,
yeah. So,
But with the products that you have, you make a monthly payment that you're required to make. And with a reverse mortgage, you don't. If you have other things you need to do, you need a new car, then you can skip some payments.
something to
So
consider.
it does have a lot of flexibility.
yeah, speaking of buying a car, this is really interesting. So, I had a client call me because she wanted to know how to request money out of her line of credit. And looking at the numbers, because she wanted to buy a new car, I'm like, you know, the growth in your line of credit will make your monthly payment. So she could just pull out $450 or whatever, I can't remember what it was, but she could pull that money out of her line of credit and just make the payment every month and never actually reduce what's available in her line of credit. Does that make sense? Because every
Yeah.
month it grows a little bit, she pulls that money out, grows, pulls that money out. So it was really kind of a unique, creative way to buy a new car without just pulling all that money out of the line of credit and paying cash for it.
That's cool.
So, yeah, so there's some really unique stuff that we can do. It just really depends on what the person is trying to accomplish. So,
So if we come to see you,
mhm.
and then we can take it home and kind of digest what you're talking about and come back in 2 months or 3 months.
Yeah, yeah. So kind of the process with me is that we'll sit down, we'll, you know, look at your situation, you know, what is your income, your assets, what does your debt level look like, you know, and then we, you know, how much is your home worth? And I put all the numbers together for you, okay? So we could get rid of your mortgage payment, plus you could get $10,000 to pay off this credit card, and, you know, whatever it is, right? And really structure it in the way that's gonna benefit you the most. But that has your loan options or loan comparison, it has amortization schedules, it's got the fee sheet, it's got everything you would want to know. And then, like I said, if you need to digest all that, just take it with you. If you decide that this is something that you do wanna do, your next step is either to do an application and or do the counseling. If we do the application, I can't do anything else until you do the counseling. It is required. The purpose of counseling is they're a neutral third party, so they don't care if you get the loan or not, right? They're there to tell you the truth. The sales guy doesn't tell you, right? So how it works, the pros, the cons, it's a safe place for you to ask questions. So if you felt like my answer to your question was funky or weird or just didn't make sense, you can ask the counselor. Again, because they're there just to lay it all out for you. What I typically hear from my clients is, I don't know why I have to do that, I didn't learn anything you didn't already tell me. But I'm not like everybody else, right? So there are loan officers that do 1 or 2 of these a year that don't really know what they're doing. And so that's really what that counseling is there for, is to make sure you fully understand what it is and how it works. And once the counseling's done, then we can order an appraisal, then we can open up title and escrow and kind of get the process going. But until that counseling is done, I can't do anything else.
And you have to pay for it.
Yeah.
I have an Edward Jones guy.
Yeah.
Who are you compared to Edward Jones? I mean, I know you're doing houses and he's doing the whole
Yeah.
financial, but
I don't do financial planning. So I typically, if the client wants, I will work hand in hand with their advisor to look at how does this impact the overall plan. You know, for example, I had an Edward Jones guy refer me a client because she was running out of money. She was going to run out of money in about 6 years because she was pulling so much money out just to make the mortgage payment, right? She was pulling way out more than, and so by getting the reverse mortgage, she didn't have to pull as much money out, and now her money was going to last her until she was 90. So I think we added like 16 or 17 years to her retirement portfolio just because she wasn't having to draw from it as heavily. So again, I'm happy to work with your advisor, but I'm not a financial planner. I just do mortgages. So,
Okay.
so that's the big difference.
How much is the counseling?
It ranges from $125 to $185 depending on who you call. Locally, Consumer Credit Counseling in Medford does it, and they're $125.
Okay.
You can, depending on your income, pay it through escrow if you're low income, and so it just be, yeah. So it just gets paid when the loan closes through proceeds.
If someone does not have enough equity, do you work with other lenders that you refer them to, or?
No.
Okay, so it's just
Either they have the
yes
equity or they
no.
don't. Yeah. So there are clients that I've had that don't have the equity, but they will pull money out of a retirement portfolio to pay down the loan balance to make it work. So the biggest one I've had so far is I had a client pull out almost $100,000. But again, it sounds crazy that you would do that, but what it did is it got them, I think their mortgage payment was like $2,800 a month. And again, they're pulling so heavily out of their retirement portfolio, they were gonna run out of money in about 5 years. So by pulling that money out, it actually extended that portfolio that much, you know, I think until they were expected to pass away. Again, so it's a whole picture thing, not just that one thing. Yeah, the product's the product. It's not going to really change from, you know, as far as the equity requirements from lender to lender. So
Okay, so shut your ears. If I do this with you, does Lori not get a commission on the sale of my house?
no, yes.
But you're not selling it if you do this, right? This
Well,
gives you money
it
to
turns
stay
over
in
to a
it.
different loan, though, right? So you're,
I wouldn't get money if you got any kind
Well,
of
that's
loan,
not-
only if you sold your house and moved out.
Right,
Don't
right.
make your decisions based on me.
well, you
No.
provide us loans, I mean.
Yeah, so if you were going to stay in your house and get a reverse mortgage, then no, Lori does not get any commission. If you're going to sell your house and upsize or downsize or just a lateral move, whatever, Lori sells your house, then Lori would get it.
Right, now
Yes.
I understand.
So if you're staying, no. If you're selling, yes.
Okay, okay.
Yeah. Yeah. So, you know, if you guys have questions, I'm happy to help. Run scenarios for you, do whatever you need. Provide as much information that you want. So,
Where's your office?
Medford.
Oh, but he'll come to your house.
Yeah.
Oh,
Mhm. Yeah, most of my clients are Jackson, Josephine County. I do obviously some in Klamath Falls, and then Douglas County, Roseburg, and then up and down the coast. So I travel all over the place to meet with clients. So, because most of them, I can do DocuSign, but most of my clients don't want to do that. They want to sit down and you know, hand sign everything, which is fine with me.
face to face.
Yeah, yeah,
Because of the age of people you're dealing with.
correct.
Yeah.
Yep. Yeah, and so I'm licensed in Oregon and California, and I will be hopefully within the next few months, Washington, Idaho, and Arizona.
So how many months ahead of time do we need to make an appointment?
A week ahead of time at least.
What's your last name again?
Alan?
Allen,
Yeah.
A-L-L-E-N.
Yes.
So you're gonna be traveling all over?
I travel all over,
Oh,
yeah.
you do?
Yeah. I don't go to California, but, you know, locally here, because I know where I'm going is nice, but I'm not gonna drive down to Orange County to meet with a client. That's just not gonna happen. So,
Unless you wanted to go to Disney.
unless I wanted to go to Disneyland, right, yeah. But yeah, the bulk majority of my clients are here local, so. But I do get referrals to people in California and Idaho, Washington, so. She got a referral to a guy in Wisconsin,
Wow.
but I'm not licensed in Wisconsin, so.
Is there like a network of reverse mortgage people that you can then refer that person to?
Yes, yes, yeah. So somebody will be licensed there, so,
Very good.
yeah.
Gee, anybody have other questions for Matt?
Are you gonna give us a book to read?
I am giving you a book, yeah. Anything else? Okay.
This was great.
Will you for the,
Oh, yeah. So if you're watching this video, you can request it. Call me and I'll send you a copy of my book.
And your phone number is?
541-897-4464.
Is that in the book?
It is.
Okay.
all right, well, this is excellent information. We really appreciate you
Yeah.
coming out. talking to us today. And if anybody has questions, they will be in touch with you, Matt. Thank you.
Perfect. Thank you.
Thank you.